Welcome, guys. It's the Market Sniper, and great news for you, precious metals fans. Yes, indeed. Don't forget, like and subscribe to support the channel. Gold, and silver, platinum. We're going to be talking about the broad sweep bull market that has triggered on a number of levels and why the industrially tainted metals are now moving and are talking big too. So this is great news for the broad spectrum precious metals markets. Let's get straight into it. Okay, so here is our gold since it's high just through the 3,500 mark up top over there. And what happened? We've had a slight respite on the gold bull for a reasonable spell. Let's bring in our draw tool here. And I'm going to show you also how we've carved that up technically in terms of how it looks. So this is known as a broadening structure, descending broadening structure, which is a bull continuation. That is what we've been warning our community. We've been covering extensively the precious metals markets. We've been actually waiting for all these events. There are alerts and updates throughout our communities warning that the silver is potentially going to have another surge of outperformance, and that platinum's triggering event is not far away, which is great news for the industrials. So let's finish with gold before we get into those other sexy metals that you all want to hear about. So the triggering event here, there was the breakout of the capping descending grind line that had its interaction there. That was at the all-time high there and over there. So you typically get the breakout move and you pull back. Black's a bit grim for such a great day. Let's transition. That beautiful word. I've transitioned. Yes, there we go. Pretty in the pink. And there we go. Also getting a nice little squeezy out here for new highs to come for gold. And as we've said before, you will sell too soon, you will sell too soon, you will sell too soon. This is far bigger than you've ever realized. And again, before I get into the other sexy metals that you've all been asking about and the exotics, I just want to remind you why you will sell too soon and you should not. You should be a hold, stack, accumulate. Accumulate. He'll get the words there in the morning. It's in the morning. It's in the morning in sunny Cyprus. That's where we are. Okay, so I want to divide CPIAUCSL into this gold, which is the best. I've done this one many times before with you, but I want to take you to the big time frames and just remind you why you will sell too soon. This candle is already looking a lot better. It was green, but it had quite a tall wick on it. Now it is racing back up to those previous highs. So this takes you literally since 69. The Vietnam War actually started from 64 and really only ended 75. But there were the little skirmishes, those specialists that were helping the South Koreans. Some special forces were there. It's kind of like what you hear in Ukraine. It's all very samey. Stagflation, samey, only hyper stagflation this time. Watch out for our newsletter and live trading day with me. Wow, and the metals are coming strong on the fake number day non-farm payrolls. That is this Friday. Don't forget to join us for that. There will be links and I'll do a live stream just before where you can jump on. But back to gold on the macro. You will sell too soon. That is why we say you will sell too soon. There is the capping descending grind line. Many will draw it as flat. You have not yet taken on an inflation adjusted, even including inflation adjustment, which is a bad adjustment, by the way. You should be using shadow stats. You get it far closer to the true cost of the taxation that the proliferators and central banking cartel are inflicting on you by the proliferation of money, by the action of wars where they steal and make themselves exceedingly wealthy along with arms dealers and other hyenas. Yes, but in the meantime, let's just take a look at this and recognize that we have not yet even made the previous high. So in nominal terms, you think you're at an all-time high. On their fake number adjusted for inflation, you have not even made the equivalent of $800 that was in and around 1980. So that is why you are not recognizing that this is going to be a far bigger move than you've ever seen before. That kind of a move. So there was roughly 1970 and there was 1980. You have that much to do. You probably started there or maybe there. That was 10 years and it was a far smaller beer of a debt-based event. Yes. despite dropping more munitions on Southeast Asia than they ever did during World War II. This is a far smaller event. This is going to envelop the UK, Japan, and many others too. We will be covering that in our newsletter and the live trading day. Watch out for that. You receive our newsletter when you subscribe to the mini series below, where you'll get a video every second or third day, a 5-video, 6-video series on how you can build wealth trading conservatively inside your investment in something like precious metals right now. There's many other places that we will be making money, including miners and other related, which are of course correlated. But this is why you will sell too soon. So let's get back to the other metals that have been getting interesting and sexy. There you go. What time frame? I should say we're on the 15-minute time frame. So inside the community, we said we're expecting likely continuation here. Over here, we were watching this on short time frames, loading up on longs on the silver after it had broken. That's right, the gold-silver ratio triggered to the downside, so it is in a corrective phase. It did make a higher high, as we had warned over here, when everyone said immediately pivot to gold. You got your first pullback, then you actually got another rally up, gold dominated still, then you got a pullback. It was squeezing around the 100 level. Then you got an even higher high. Again, it's the central banker's money, gold, that's why it is. But this big slap in the face and then the squeezing and grinding around the 100 did set up for a little bit of downside. We expect this gold-silver ratio to run through the 92.7. We'll look at the refreshed version of that now. But while we are talking, silver is running. While we are sitting here looking at you and talking and telling you great, beautiful stories of the birds and bees, this is, as I say, the updates through the community that we've been providing. Very few know that in actual fact, slight little sidebar on the dollar, because the dollar is part of this. We are saying XAG USD, XAU USD, XPT for platinum USD. And in actual fact, when you compare the dollar with the euro, which is its kind of antagonist partner, the bulk of the liquidity in the financial markets is jumping between the two, based on whoever's got the better outlook right now. This spell since 2008 of dollar-based strength for us is over. Euro, US dollar, euro. So we're putting the dollar as the base currency and the euro as the term currency. And what you're actually seeing is that the dollar has broken a number of key levels. It broke the base level that we had for it over there, just under 91. It broke the upside HVF funnel that performed on the Dixie when we predicted that the Dixie would run 110. Note, I'm talking about the dollar index now, not the euro USD. That target was made. It didn't make the target against the euro. Why? Because euro, believe it or not, has actually been a little bit firmer. We had the weak pound that had its pension crisis, and the yen is in the Dixie, which has been very weak since 2011. So this actually made target on the Dixie, but failed on the euro. It made the second interim. You've broken that funnel as well. So you broke the basing level at 91. You broke the funnel right the way through to the downside, and you broke the trend line, as many would refer, that runs along the lows of all of these. The dollar milkshakers will be crying. Woo. By the way, warning on that. Whilst that can still happen, you did also get, and we'll be covering this in the newsletter, the event where rates spiked on the yields in America, but the dollar went down. Ooh, I wonder if they functioned on that possibility in milkshake land, because that is when everybody is losing faith in America. And not only did the rate spike, but instead of the expected dollar run, you got a collapse. I suppose I should show you that chart too. So listen, everything we say is based off what is seen as a fact in the market. So let's just bring that chart in. And why have we taken the segue to start talking FX? That's so good. We were showing you silver. Don't worry, we're going back. But you need to understand this. This is what happened on the Trump tariff tantrum. This is what happened. Rates spiked and have continued to trade up. That's the black line there, and are now higher. What happened to the dollar? Dollar down. and is still down, the black line over there. 30-year rates up, 10-year rates also went up, 20-year rates went up, long end went up, 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 up. And what actually happened? Dollar hard down, not slightly down, hard down. This is the Dixie, by the way. This is the dollar measured against other bad fiats, yes, of which the euro is one. And what did you get? You got a chronic underperformance. I've actually done the same chart with gold where we have the dollar index. So what were you looking at? You're looking at the dollar index and the 30-year yield. What should be happening every time the yield goes up? You see the blue areas, rates go up, Dixie goes up, Dixie goes up. Rates go down, Dixie goes down. Rates go up, you get my, you're picking the trend here, aren't you? Goes up, goes down, goes up. That's what happens when your nation state offers a higher yield. Your currency gets inflows to harvest that higher yield and strengthens. What happened that is so significant in these two orange boxes? Orange man ban, Trump tariff tantrum, and of course, rates up. Everybody's selling the debt, but getting those dollars, selling them, bye-bye America. Loss of faith. So milkshakers haven't factored that in. They just think any form of rate spike means the dollar strengthens. That is a key Achilles heel, not if it is foreign divestments or even local, national Americans shorting the debt market, of which there are many in institutions, hedge funds, etc., and moving money into the likes of the Swiss franc and gold and other investments. So during this period, gold went hard up during the Trump tariff tension. He'll spit it out in the end. Okay, so the key thing here is people need to be really concerned about the dollar. They need to be concerned about the dollar, and what I just showed you is that the trend changed. That's the coverage you get in our community right here, right now, not themes and guesses and hunches, and I'll wait for the data, and I'll wait for the employment data, I'll wait for until the unemployment number comes in. It's a lagging indicator. It's the last thing to fall. GG. Yes, you know who you are. It's the last thing to fall, and you get lied to on the non-farm payrolls worse than anything. We had 814,000 adjustment, nearly 1 million adjustment last time. We put in all those jobs, there weren't any. Okay, that's why Biden never had a recession, because you qualified for a recession, but employment was red hot, but the number was a lie. Oh, okay, so we get how it works there in terms of BLS. They could drop the L. Anyway, so that's where we are. That is where we are. Back to silver. Look at that surge. Surge. Oh, it's beautiful. It's moved while we're there. Getting a little bit of a second interim run and maybe a little bit of pushback right now on the silver. This is on a 15-minute. This is the small guy. We showed inside our community all the guys, that's right, as they were forming. We've shared that on Twitter as well. Let's see if I've still got them, all the silver, historically too long ago. This is what happened on the silver charts. I'll get legacy silver. This is it as we went through it. So we've been tracking this. This is silver a little further back. So first of all, that was the break of an HVF. Boom, to the upside. That was at about 32.69. Another wind up expecting the break. Let's go and see how it done. This is what we're talking about in the community, so you can trade your way to further wealth. Let's get out to the 1 hour where that was there. It's a beautiful candle. Love a little bit of that in the morning. The silver guys are going to be happy as all muck. And I consider myself to be one of them. Yay, silver. So there we were. That was the squeeze. That was the squeeze within the squeeze. This is why you trade HVF method. This gets us interested when we're supposed to be interested. So much waiting. So many people have waited for silver and died on their cross and eventually given up on silver and bought something else. This was the other squeeze within the squeeze that came. We can draw that for you as well. And it keeps giving you the next target. So let's just show you. That was the target there. What happens at targets? Well, two things happen. You take a break. And we actually had a confluence of targets. We were discussing this in the community. We said this makes a very strong trade. The geometry is very accurate. So this is how it looks. We draw this winding up structure here as well. I need to move that box because it's on top of the first box so that you can see there's actually two draws here. So we move that one to top left. Up in the other corner there, move it out the way. That's it. You can see the confluence of targets here, there and there. So we knew we never know. On balance of probabilities, where our expectation was that the 34.3 was going to run. And what tends to happen at these points where targets happen, if it's a strong trend, you get a winding up process for the next up leg. And that's exactly what happened. If it was over and done, you get hard pullback, which you got, but without a decent rally, and you set up something that wants actually to come down. But no, this is far more important and interesting than that. No, come down, erectile projectile, he says, up and up and up, and where we go. And the next target is 35.29. Now, I've spoken a lot about this range of 34.5 to 36. These are very, very key ranges on far bigger time frame charts. The next time you have serious resistance, I consider really serious resistance, is the 45s to 50 ranges. So let's say, why does he say that? Okay, let's go have a look. Let's go have a look. So we're expecting a really good target there, and we go out, out, out. We can take that off now. We're on a much bigger time frame, and that one too. And that one. Let's get them all off. So those were all the HVF draws. The tool that you get as a community member with us. Precious metals are going to be not only your investment, but they're going to be a lot of your long trades. You're going to be taking those profits and you're going to be stacking extra and making money on money. Click the link below to book a call. Click the link below to book a call if you want to make the most. Remember, it's all about building wealth in this reset season. Boy, is this reset season. And there's going to be great opportunities to build wealth in the reset season. It's not all doomer. Unfortunately, it's a polarizing event. Many people are going to be hit by a freight train that they never saw coming. You've got to make a decision which half of this do you want to be. Okay, so here we go. We're going to keep it log scale, I think. Let's just make sure we log scale. Yes, we are. So key levels of significance that have been issues before. We had the 26 and you have these localized highs here. That was this descending triangle, which was invariably bearish. We technically saw that after the 2011 run and down, down, down. And we actually, yes, I'm afraid to say, traded that inverted HVF for further downside. So we were long-term investors in silver and made money and bought more whilst going short. That's what you can do. We're not a perma bull only. It must justify. But I'm here to tell you this is one of the biggest, most significant precious metal bull markets. We still have platinum to cover. We'll be covering it with you soon. We're doing each of the core metals here, and we're covering silver right now. So this is a very important moment. This is a very important moment. The basing there, the flush out, obviously that went with CB19 was a great opportunity. The premiums were obviously a lot stretchier. You couldn't have bought for 11. I think the cheapest you could have got was $14. And then this is the breakout. This is a key breakout on our structural, again, very similar to the gold. This is without the CPI adjustment. So silver on a CPI adjusted basis is really, really barely started, guys. But when it runs, it runs, it runs, it runs. And you can get days where it'll do 5 times, even 6 times what gold does on the upside when you're in that peak purple patch of it running. So that is the trigger. I should hide the lines. It's looking very, very confusing in there. There's a lot of TA going on. I am just highlighting to you that on this time frame, let's just make it a bit bigger like that without the lines. You have taken out localized high. New high for silver. Bravo, bravo, bravo. Where's my slab? Oh, I'll have to show you the 5 ouncer in it. Beautiful, beautiful. Our links for gold right below. Pure gold in the UK. ITM trading if you're in the USA, and others are available. But if you use our links, you can say thank you and you can pay the same price we do for our precious metals. We are buyers and you will pay the same price. Exactly. This move is the next highs are here, which is why I was talking about price levels. Between here and here. This will take you through localized highs. Then you are in the rare earth minerals airspace, I like to think. This is where the oxygen gets thinner and the open territory for running gets further, wider, longer, and a lot higher. And you will be taking out these, but they are the next key resistance point. But we are right here now at, let's get it in an exact value. And this is why I say getting past 35.3, if we could get through that localized high, what is it, 37? Then we are in the point where there's very few moments which have been higher. There's that one other localized high after a bounce that was 44, and then we're in, as I said, basically the 45 to 50 range. So if we can get 37, we are going to be looking at the 45 to 50 range as the next levels of resistance. There just isn't that. When you've got to these heights, typically they've been spikes that weren't held for very long. There's the iceberg above the pink line, and there's the iceberg above the pink line. You're going now, and it's not an iceberg this time. This is going to turn into a mountain based off that sea level at the pink line, and that will someday become a floor of support rather than resistance. But we are breaking it as we speak. This is excellent news for silver. Excellent news. People love the cup and handle draw of this, and they're not wrong. It is a technical analysis pattern. But we actually prefer, because of the extent, though, the dollar not being the same dollar, when you re-rate these, that's why you have such a strong ascending line here and you have such a hard resistance. It's actually an ascending triangle, any form of adjustment for inflation, and you'll get more of a squeezing triangle. Let's do it for you just to show you that silver has barely started. Some of you are going, oh, I don't want to buy now. It's expensive. You haven't seen expensive. But let me just remind you, this is all function of a collapsing buying power of the dollar. When the debt collapses, the currency collapses too, which is why our warning to all the milkshakers that you owed a spike on the dollar may not transpire if it's foreign money, particularly that is withdrawing, and the US is propped up on foreign money. 33 to 35% of its debt is held offshore. If people go into a contagion, why are we the only ones holding this? It's going down. Watch our newsletter about hegemon demanding to be buried. Ailing hegemon demanding to be buried with his slaves. That's right. Which nation have I put? Which two nations have we put as slave nations? That'll be in our newsletter. That go down, that are tied, bond bound to the mast, to go down, down, down. Yes, yes, yes. So when you look at this like this, you can see much more of what I was referring to in terms of the squeezy here, and it more representing a triangle. And as I've highlighted, CPI AUCSL is a BLS number and deeply understates. So really, if we could get shadow stats on this number, I'm telling you, silver's here. Silver is here. It is flat as a pancake, just starting, and is deeply needed. Okay, so this is great news. Now, we also mentioned platinum. People have been asking and wanting to get exotic. The truth of the matter is you don't need to get too exotic to do well in this bull market. You think you're missing something if you're only in gold and silver. I do think, funnily enough, that platinum could, in actual fact, overperform. Look at that. We've almost made our small time frame target of 35.29. Look at that, pumpermentals. You saw it in with the Market Sniper. You're watching it here on the Market Sniper. The Americans are still sleeping, and we are already talking and jiving and getting excited. Of course we do. We love the smell of napalm cash, the burning of fiat for the great metal. Hold it to your chest. Hold it to your chest. It feels good. It's healthy. That's why we have colloidal silver. Let's watch this number 4 together, my God. We started and always down here. Look, it is a 15-minute chart. It's not a daily. We have just watched the target run on a beautiful shoot to the upside for silver. That's magnificent. Okay, admittedly, the 15-minute, let's take it back to the daily. But you have just watched 35.5 fall. This is it. You watched it with yours truly, the man who has kept asserting the most important thing you can do for your wealth is get into gold and silver, the precious metals complex, and has also covered the platinum for you as well, which we will do right now. Let's say goodbye. We've got so many silver charts. You can tell we've been having fun. XPT USD. Let's have a look at it. Don't forget, this guy is the most undervalued. So why is it the most undervalued? You can't just say things. Lots of people just say things. I listened to a Twitter Spaces where a certain influencer on YouTube who has 3 points typically on a whiteboard was saying, it doesn't matter the supply of bonds. And I was, wait, say that again? It doesn't matter, he said. It's only about the employment number. It doesn't matter the supply of bonds? 7 trillion to roll over. A big, beautiful bill of pure expenditure. By the way, Liz Truss, what happened to Liz Truss? A stimulus budget. Little reminder. We said when those events of Kwasi Kwarteng and Liz Truss happened, we said the same moment is coming for America. I've just showed it to you. The dollar rates went up on the long end and the dollar went down. Exactly that, a crisis, and Trump backed down so fast everybody's head was spinning. Liz Truss and Kwasi Kwarteng of the UK in September of 2022 did the exact thing, did a stimulus budget which was more spending. Stimulate now, pay back debt later. One of those. A very small version of the big, beautiful bill that even elongated muskiness now, and don't trust him, you can't trust him, but he's been preserved as an avatar of sound money for now because chip-in brain Neuralink thing. But anyway, he's being preserved as an avatar, as is Jamie Dimon. These are not people you should be trusting, by the way, but of all establishing alibi to say, we told you so. We told you so. Never is it so mathematically and an absolute assured fact that somebody is going down as the American finances right now. And with the loss of the debt comes the loss of the currency, no matter what people spin your brain with. You may have, and it is not required, as I've already shown, you may have a short technical spike on interest rates, but I've also shown you why that may not happen, because if more than a third of the money is foreign money, which is deciding to leave your shores, you are going to have a run on the dollar. So here we have, I wanted to show you, I got so excited, I forgot what I wanted to show you. We were talking about platinum. That's right, the most undervalued metal. Oh, and I haven't even had my coffee this morning. There you go. So there's tied to the mast, United Kingdom, suddenly become toxic bank, wants to be the biggest holder of US treasuries. Now, small point on this, my beautiful people. When it's an open secret that you're going into a stage of financial repression, which means the actual inflation rates and the loss of buying power of your currency and the downgrade in everybody's living standards is so vast, and that the yield paid on debt instruments is negative real interest rates, that is called decades that you're looking of financial repression, assuming it doesn't go into contagion and outright default. Who buys that asset? Is it a financial for-profit trade, or is it not-for-profit investing? Which nations are doing not-for-profit investing in a known absolute fact? Druckenmiller's told you now, once they got their trades on. Paul Tudor Jones has told you. Jamie Dimons is telling you. Credit event. Elon Musk is telling you on a different level that you're spending too much and you're bankrupt. Everybody told you, and we told you in 2020 that the bond market turned and that this moment would come before any of these other punks right here, right now, hit the like button on this channel. And who's running in there to be the biggest buyer of treasuries? The massive moon run-up in treasury holding that has now seen the United Kingdom overtake China as the second largest, to the other captured patsy, which is Japan, sitting way up top there at over $1 trillion. What happens? It's not just an American fail. They will feel it hardest. They're the hegemon. Everyone goes, and I have to listen when I was on the spaces, and it was mainly US influencers. Love my American audience. I am not happy about what's going to happen to you. The Trojans in your government have destroyed you. But I need to tell you that your influencers are full of BS. They are still going. The guaranteed box tick run, when I listen to the likes of the person I already mentioned and the others, is US cleanest shirt in the laundry. The good old cliche. The rest of the world is so stuffed. You're the hegemon. The man on the 27 steps staircase falls far further and far harder than the man sitting on the 3-step staircase. Okay? You are the hegemon. And you've had the hegemon privilege, and it's going to suddenly disappear. You fall hardest. And all the little slaves that are tied to try to prop you up, like 3 drunken men, a Japanese, a British, and American, are smaller and they fall less far and they're slightly less drunk, but they're prepared to take the poison with you, which is what the United Kingdom has done, are part and parcel of that collapse. But they were not the hegemons, and they did not have the global world currency, and having it taken away is something that won't happen. They will fall from less far, but the quality of living standards for those nations will also be bad. It's also interesting to note the Luxembourg, Cayman Islands, and Canada and Belgium have also gone up as well, but not to the same degree as the good old United Kingdom under Labour, under Starmer, under the WEF candidate. Let's go back to why I said platinum is the most undervalued metal. Here we go. It's just about still in the library. Here we go. Here we go. This is platinum. Platinum had its dinner eaten. It fell really hard. So this was the errors. This is a chart from 2005. And why platinum is, it's hard place to find a long now. Some brokers won't offer it. I see that as a doubly important point because it's a difficult market to hedge. It's a thin market. It's a very rare metal. The other metals, anything more rare than that, like rhodium that I have on here and palladium, it's almost impossible to trade. The 2005 to 2025. 20 years of history of precious metals right here, brought to you, the Market Sniper, to you, so that you can see it. Platinum group metals are underperforming from this high at 2008, which was the run-up from 2000. Remember, all-time low, actually, for gold, when Gordon Brown dumped United Kingdom. Funny how United Kingdom, some of the smartest people in the world, is the dumbest money in the room and makes all the dumbest decisions. Let's sell our gold. Year 2000, Gordon Brown. You'd think someone inside there was asset stripping the country, wouldn't you? You would think that. What actually happened? Do you think that gold actually moved, or did the name just change to Rothschild at $250? The prudent buyer of last resort. Gordon, I think it's time. I think it's time. I think it's time you let the metals go. It's time. It's time to sell. That's what happened, my friends. And then today, the biggest supporter of holding the drunk man, the fat drunk man up, United States of America, Britain. Oh dear, oh dear. The dumbest money in the room. They're like Chelsea Football Club. Anyway, up and up, or Man United, I should say nowadays. Anyway, that'll upset the football fans. But anyway, here we go. Platinum group metals underperformed during this period. Palladium was low. It's the gray line. But palladium started to diverge on the bull during 2011 into the highs of 2011. Platinum didn't have a bull run. Silver did. Silver in blue. Gold in gold. Gray is palladium. But this was the substitution of the Green New Agenda. Palladium was favored, suddenly a lot more expensive than platinum. And then the super surge as we went all Teslas and batteries, and palladium withered as nobody wanted to do diesel anymore. Nobody wants to do, I love turbo diesels. 4x4 turbo diesel with an engine that'll run forever with torque right there under your foot. More drivable than the good old Revy. And I've had the good old Revy cars, and I've had the more, let me tell you, I want a turbo diesel. I'm waiting for them to bring back the turbo diesel engines. Until then, I'm staying in older cars. I just love them. Anyway, so smoky arse I am, but nonetheless. Rhodium, of course, had a similar run. That's the black line, extremely thin. Forget about trading in it. There's a couple of ETFs, I think, at most, that you can do. Super surge, rhodium, which is a hard, they put it over precious metals. It's very valuable. It's almost more valuable in most instances than the precious metal itself nowadays. And it makes sure that your soft gold, your soft silver, whatever the case may be, doesn't get scratched or damaged. So they use it in jewelry, and they can use it in industrial causes as well. So that's it. But the dump of palladium and rhodium is the story of the post-green bubble bust. Okay. But gold, since this period, the green line starts its reserve assets move, which went with 2020, and accelerates here. And this is all about reserve assets and gold. Silver was slightly lagging, but we haven't got the recent activity that we'll see right now. Silver will have popped past palladium, in my view, is the second best after gold so far for the 20 years since 2005 to today. So platinum is down here, friends, in terms of valuation. It's 19.5% off 2021, and it never had a run in 2021. That's what it did in 2021. That's what palladium did in 2021, okay? And it's still 53% off an all-time high way back in 2008. Wow. And that's when it was usually, as is the case, more valuable than gold. Platinum, my whole life in South Africa, we had the platinum price on the radio, the gold price on the radio, my childhood, my everything. We were a metals and mining land, as well as a farming land. And platinum has nearly always been more expensive than gold. Nearly always. Recently, you were buying at sub $1,000 diminished dollars. And gold is now going for its high at 3,500. Platinum is now breaking to the upside. Very, very strongly, massive potential re-rating upside. And don't forget, Zelensky bought 51% of Northplatz in South Africa. He took a plane, left the war in Ukraine in the capable hands of those shooting the deserters in the back of their head and the muggers picking up and kidnapping males from off the streets to give them 2 weeks of training before throwing them into the mincing machine while they try coerce Georgia and other nations and Romania into opening a new front. Yes, 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 that is your Western hegemon. That is your Western hegemon. In fact, I've got to the point where a nasty old collapse couldn't happen to a more perfect group of people in my books. That's where I'm at right now. But that's not what I want for the citizens. But in terms of the politicians, they're making out like bandits in the usual arms trade and hyena-ness that they get up to. But let's just leave that. As you can see, that is why 25% for 20 years. In a real inflationary environment, platinum is absolutely lagged all forms of, this isn't adjusted for inflation by any way. Gold is up 684%, silver at 395, and now looking at closing the gap. I want to warn on the gold-silver ratio, though, next after the platinum, that you could still have, just like Bitcoin dominance, you think you're getting an alt run, and then boom, 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 the gold comes back. If we have real debt collapse and the money surges anywhere, it will surge into gold because they need a high-value item that doesn't take as much storage as silver. So you've got to keep that in mind. We'll talk about that in a bit. So here's the story of platinum without all the others on it. And it's a tale of woe that is now turning. There's the falling wedge. There's the great fallout of favor that went with the green agenda. Boy, did it get slammed. It got slammed down to 747 at its worst moment. Believe it or not, you could actually have had in 2020, you could have bought platinum at a low of $564. That was the falling wedge that they broke out of and subsequently had this construct, which is an upside HVF, which we will show you. We're on the monthly, we'll go to the weekly. This is a squeezy Japanesey. We've been watching this, we've been updating on it and saying it's going to come inside the community aplenty. We've even done a few free views on YouTube around the fact that platinum is the most undervalued, even more than silver, by the way, in my opinion. And it is still used in some of the finest Rolexes, so it's jewelry popular, and it does have that more unique super special. Let's draw it on the weekly time frame. Let's get that into the week and show you what the breakout is that we're showing you using our draw tool, and then we will complete this video with you. But this is a great break for platinum. Let's get rid of that draw. It is just triggered now. We have now had a triggering event. And this is very important for silver, but we were also watching because they both have an industrial element to them. We say for silver to run, we actually need to see platinum to start running. And for platinum to run, we need to start seeing silver. Because what you're actually getting is just for their monetary and just for their preciousness, because economics is not good out there, friends. It's a recession turning into a depression. You need to see, listen, these things are so relatively cheap now to gold in terms of gold's move that we have to rotate in buying some of these because they still have the precious metals. They're still hard to find. It's still a proof of work that involves energy digging a hole in the ground. It still requires the same thing, and it's absolutely needed, and there are shortfalls. In the case of platinum, remember, it's Russia on about 11 to 15%, South Africa on about 70%. Rest of the world doesn't even make up 30% on supplies of platinum. So some would say not the bastions of stability, certainly on the BRICS side of the team. So this is a key breakout that has happened literally this week, literally this day. And we have been a long-term holding. We got flush out to the downside here. Then it started to move back up. It got back above the 1,000 there. This looked like it was, this time it was meaning business. This is a very long-term pattern, guys. It's not random. This is a long-term squeezing, holding pattern that has been held. It's got a very negative economic environment against it, but it's held and squeezed like this for an extended period. That high started in 21, and the low was way back in 20. That 20 to 21 high, you've been inside the range On that volume by price, you can see the biggest, most significant level at 968 in and around just under the 1,000, and now you have broken. Not only does this run the 1646 target, which is there delivered for you geometrically, and you may get a rest. Think the wind up on that 15 minutes on XAG that we showed you. We saw the target come in together. Well done, everybody. On silver. What's also going to happen is this is the first setup in a new trend following absolute, go back to the monthly chart, decades of downswing. So there you go. If we take it from the very high, that high came in 2008. You have literally had underperformance from platinum all the way into 2020 from 2008. 12 years of underperformance. Then you had one spike and then holding, cooking, setting up since 21 to this break today as you have it now. So that is huge, 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 good people. This is a major move. It is the most undervalued, and we are going to have a rocking precious metals day. Watch the X feeds. Everybody's going to be all over it. Told you so, told you so. There's many a good man and sound money. Well done to all of them. Buy your gold below, buy your silver below, gold silver ratio, and then we're done. So what's happening on the gold silver ratio? So we called this as a downside break, and we think that you're going to get through 92.7 to the downside, having been as high as 107. Remember, the first high wasn't the high. It was squeezed and it did go higher. But it has turned for now. Many will say, aha, and you warned that it could go higher. There will be some in the comments. Everybody wants to tell you how stupid you are or how wrong you are. And that's okay. It's part of what doing prediction is. Here's what I need to tell you about all of this. You can come down to 92. I think you could overshoot and do 90, for example. But I need to show you what happens at 90. 90 has served as a key resistance, but for one supreme event, CV19. It has proven resistance. You've sold off. 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 I could have included that one. And then finally we squeezed, and we popped up and we ran 100 again. So there's only been one event prior in modern era. I'm not going back to the 70s and 80s. In the modern era, apart from this one, where you've run 100, every other time 90 has been a sell-off point, which has either seen gold underperform a little bit and silver catch up a tiny bit. On relative. We had such a surge up, central bank buying, hedge funds, institutions. So what happens where you have a very key resistance point that is rarely broken? It turns to support on the other side. It's the natural polarity. Now we had a target of 92. You can overperform to 90. You can get a bounce. Now you might just get one bounce, bounce again, and that would be beautiful. Descending triangle, and we go down. The minute we reach 75, I don't even buy gold anymore. Forget the 75-25 rule. I would go 50-50 now with this possible turn. Please note. And you can then just only buy silver when you break the 75 to the downside. The 75 has been medium-term support. Rally. Yeah, medium term. So if we break that, the one I really want to see go, of course, is 65. That's complete confirmation. But what you could also get is you could get the following. We haven't had the contagion yet. Remember, Trump stood back. When the rates went up and the dollar went down, he quickly stood back. He got tapped by his handlers. Buddy, you can't take another day of that. Money scooting. The dollar's going to go into contagion. Then all the momentum traders are going to jump on. You can forget it. You're going to get that 40% devaluation that you have no trade deficits that somebody calculated. Was it Deutsche Bank that calculated a 40% devaluation, and you won't have a trade deficit? Because you won't be able to afford to import anything. That's part of the reason. And stuff you make will become kind of cheap. That's one of the things. Goldman Sachs, of course, has said gold is 15% overvalued. So you see, Trump will never say that. It's not for a president. He's ho, the dollar, US strong, yada, 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 yada. He can't and won't say that. It'll look like a flippening. He leaves the banking cartel to do that for him. But actually, he needs a weaker dollar. He needs a weaker dollar. Anyway, so the other thing that could happen is you come back down to 90 and you could bounce back up and go above 100. You could go back, you could come right up here. You could even take out that if we get real contagion. Because the thing that chases the gold market higher, even though it takes a lot more money, because it's now must be at about 23 trillion by market cap, the thing that does that will be the people exiting the debt markets. And they aren't all going to want to buy. Swiss franc in a debt-based collapse of contagion. There will be money running into largely gold. It's going to be the primary beneficiary. And I think JP Dimmon's bank, good old Fed Bank, suddenly now the big bull for precious metals, said that if 0.5% additional money moved into, this all comes from their records, I'm reading it, I won't find the tweet in time, I don't want to keep you here too long. If 0.5% comes in, we could be through $6,000 in 2029. 2029? They obviously are forecasting. They have to try to keep it conservative and not be too shocking. They prefer not to forecast a disorderly decline. Me, I'm in the disorderly camp. You don't deflate a Ponzi without it getting disorderly. Straight and simple. That's my take. So I'm not sure you have to wait that long. But you could also get another rally up. So remember, the amount of times we've called the silver turn. This is the silver turn. No, this is the silver turn. This is the silver turn. That's the silver turn. That's the beginning of the down move. No. Whoops, it's gone higher. Okay, this is the down. Be careful. It's a cry wolf scenario. And we've yet to have contagion. And if we get absolute contagion, it's the big money that will be moving out of debt markets. And it will go directly into gold because silver takes too much space and storage, not high enough value. Okay, that doesn't mean we won't have, and remember, we've predicted a single digit through 10. And we're the guys that did the same on oil for the gold-silver ratio at its peak. It will overshoot to the downside. So we are super bull silver. But you've got to let the stages run its case. You even getting down to 90 does not mean you've reversed. Tell me when we've broken 75 and 65, then I don't buy gold anymore. I only buy silver. But I am already well positioned for silver. And I'm just warning, there's many stages to this collapse. Okay, that's it from yours truly, the Market Sniper. A great day for silver, great day for gold, great day for platinum. Let's look at that silver price one more time. Let's take it down to the lower time frames, the daily. Nice little squirt above all the localized highs so far, 1 and 2. Literally for quite some time. Let's go slightly up to the weekly. When last were we this high? Literally the Wall Street bets story of 2021, I think, and 2020, which was a bull market, a mini bull market high, and we are taking those out. So this is the big one. Okay, till next time, don't forget, click the link below to book a call. Learn how to, with judicious use of leverage and stop losses and real targets, to further stack your silver and gold by trading the setups as they come, right down to fairly smaller time frames. As you can see, beautiful little HVF. It's a beauty. We said we expected that's probably what it's going to do. Why? Because we're bullish. We had the gold-silver ratio on a downside breakdown, which still has to make a target 92. We expected continuation at the targets. Remember all the targets that were here? We had two patterns that gave targets through here. So we expected continuation. That's why we had silver longs. That's why we just captured the surge. You want to be in the market at the key moments for the surge. Volatility-based squeezes are the best way to get an asymmetric reward to a tight stop. You can learn how we do it with HVF method, the Hunt Volatility Funnel. Click the link below, book a call now, build your wealth. It's the most important time and you will be given plenty of opportunities. It's not all doomer. For those that don't, it will be a polarizing event. Your currency will turn to dust in your hands. The acceleration, the convexity curve that I haven't brought up, I've shown so many things today, I don't want to carry on. The convexity curve of how decades happen in weeks is here in terms of devaluation of money and fiat. The warning to milkshakers sitting around waiting for a dollar spike is exactly what the Trump tariff showed you. If foreign money is pulling out and even your local money is shorting the debt market and is looking for assets offshore, you will have a sudden suction from a nation that has been used to being a hub for technology, innovation, tech stocks, everything. You'll have a sudden suction that will suck the air out of your lungs, and you will realize that unfortunately the fall of a hegemon is the highest and hardest fall. Regardless of the slaves you are demanding to be buried with, they were never as high, they will never fall as far. Okay, with that, I'll leave you with that beautiful sight of that upside HVF having just made target. Don't wail in with leverage now. Investors, keep stacking. This is cheap as chips. Till next time, I salute you and say goodbye, precious metals. Love you all.
Tired of profit wipeouts and blown accounts from following trade signal groups and other YouTube channels? Looking for a better way to trade, reduce your stress, and minimize your risk? Become a skilled technical analyst and see the charts and markets in a new light using the successfully proven HVF method by Francis Hunt, while being surrounded and supported by a principled, structured, and experienced community. Enjoy a constructive learning environment while practically trading markets, supported by a bespoke platform run through browser and app, specifically designed to teach and engage you whilst learning and growing as the markets move. This is not a Telegram or Slack signal group. All trade ideas are based on a proprietary technical analysis process honed over decades, which is the HVF method, leading to trade ideas with fast-moving breakouts and tight stops, exact entries and exits, nuanced interim considerations, and ultimately, strong rewards. Submissions are graded and scored by Francis for potential high-quality setups, and we provide bespoke tools to help get the job done properly and with precision. Over time and with focused effort, you'll begin to look at charts and price action just like Francis. Community updates every day by Francis and our 3 webinars a week provide a 360-degree approach, which are presented by our experienced team of trade leaders to spot potential trades. We're a community of self-actualized individuals, spanning the globe and active 24/7, 365. The premium community provides a warm, supportive, and cooperative place for people willing to listen, participate, contribute, and to learn. We've changed thousands of traders' lives. Transform your approach to trading now. Transform your life. Book an introductory call with us on the link below.